All right. So welcome to our very first episode in our Smart Money podcast series, brought to you by Investor Den and Expert Advisor Consulting. And today we're going to be talking to an expert in the field that we're very, very excited to talk to because he's been doing this for 14 years. He's an expert Forex investor, and he's got a lot of knowledge that we want to share with you guys. And so, without any further ado, I'd like to introduce Obaid Masih to the show. Thank you so much, Obaid, for joining us today. We're excited to learn from you and get some of the insights you could share with with Forex investing. So welcome.
Hey George, thank you so much. So nice to be here with you.
Yes, and again, thank you for coming. As we were talking earlier, we've been trying to connect for quite some time, and with schedule conflict, it makes it difficult with everyone being so busy these days. But thank you so much for accommodating us and joining us today. And so,
Absolutely.
Yeah, and so again, we're very excited to talk to you. You have a lot of experience in the field of, especially in Forex investing. And so if you want to perhaps share with the audience a little bit about your background, how long you've been doing this, so they have a better idea of where your expertise comes from.
Absolutely, yeah, man. So I've been in 14 years. I've been in data science time series and the investment aspect of time series. For 10 years, I worked at Citibank. Founded the most complicated machine learning and AI departments in Citibank and General Motors Financial. So throughout this time, data science and the Python coding, basically, they've been kind of like the power force behind the new kind of investments and the new kind of trading lately. And that is what I've been involved in. Forex has always been a passion, because it's such a great way to understand countries and economies and the way money moves. So, and I'm very thankful to all my previous employers like Citibank, General Motors, and Sapiens Analytics that really gave me an opportunity not just to work and build my experience, but to actually learn how the currencies work and interact with each other. And honestly, if you really understand it, they create an greatest opportunity for you to build wealth out of the time series. So I think like my career has been blessed. Like I got into the perfect marriage of technology and wealth building together.
Yeah, no, and listen, that's a amazing pairing right there, because especially now with the way technology is advancing so much nowadays, to be able to leverage that into creating wealth in a passive way by automating your ability to make investment decisions, where you're removing the emotional aspect of it, and you're basically analyzing at a much faster rate that your brain could even compute, because you have the computer doing it. I mean, that's a huge advantage. And so,
Absolutely.
yeah. Now, let's jump into it. Because people want to learn. Okay, how is it that they can generate wealth, and how they can leverage, technology in order to do that. But you always hear the term being thrown around. Okay, so I'm a Forex trading, Forex investing. Now, what is the difference, and what do you consider yourself? Are you a Forex trader? Are you a Forex investor? And why do you differentiate between the two?
Yeah, I love the way you put it, because that is all the difference, man. Like I never call myself Forex trader. In fact, always think about you like as a Forex investor. The main difference between the two, and I can use all the big terms, but the main difference between the two is patience. Patience is the biggest difference. Like, the money only knows one thing. Money always moves from impatient to patient. That's the only thing it knows. And Forex investing really accentuates that. So Forex trader is basically only focused on the technical aspects. They usually trade on like 4 hour time frame, and they usually want to wrap up their trading within a day or two, or sometimes few hours and sometimes few minutes. And that is okay. Some people do that well, and some people can make money in that too. But that is not me. On the other end of the spectrum is Forex investor who really take the time to understand one key concept. the key concept is that anytime anyone will ever create any wealth throughout history, you can only create wealth and build wealth in an imbalance. For example, like if I tell you Apple stock today is $13, you wouldn't really care about the candlestick chart, the technical analysis, the MACD, the stochastic indicator. You're like, why would I worry about that? I know it's an imbalance. Suppose you know the future, and you're like, I know it's an imbalance, and I know that $13 stock will go to 200 at some point, or even more. So you will jump on it, regardless what the technicals are, or whatever your trend line or support resistance are saying. Like you're like, yeah, I need to jump on it because this is an imbalance. So the forex investor is all about understanding that in order to create wealth, some imbalance between the market and the price has to be there. We do use technical analysis that has its place in there. But the main reason we call it forex investing is because forex investing is done by matching the strongest of the currency with the weakest of the currency out there, and we combine the both, and that is how we create our imbalance. So the beauty of forex investment is, which I think like it beats securities, stocks, bonds, and even real estate very well, is because it gives you an opportunity to really go in and create that imbalance that creates wealth for you at a custom way. And machine learning and AI is a big part of it. That is why, like, I have been involved in it for such a long time, because it helps you not only find the weakest of the currency and the strongest of the currency together, but it also times it for you. You got to time it too.
Yeah, and I think that's a huge key factor there between the difference as someone that's sitting there manually trading when as opposed to having that AI technology, which is basically scanning multiple pairs across multiple time frames, basically 24/7. Where as humans we can only do so much, right? So like you said, if you're there and you're trading during certain hours of the day, when you shut it down for that day, maybe you missed the where the trend was. It's like if you're
Always.
fishing, right? It's like you can sit there fishing for 8 hours, and when you pack everything up, that's when the fish comes. Well, then you missed it, and then you had a bad day of fishing. But if you have the pole sitting there 24/7 waiting for the fish to arrive, then you have a better chance of.
Oh my gosh, I think, yeah, I think you nailed it, because that happens to like so many people. So many times I hear them, and even like so many of these so-called forex screeners are basically only looking at the delta change in percentage, and then they call themselves, oh, we are AI powered, we are machine learning powered. But all they're really seeing, they're understanding like, okay, this pair was like plus 4% or 2% a week. Let's call this pair stronger, or this pair was negative 3% down. Let's call this pair weak, or this currency weak. And that is not like exactly AI. Like that is just basically just reading the symptom through computer. So even that's like so many, and that's what you gotta watch out for. Like I always tell investors, like watch out for these screeners and these so-called AI powered out there, because that's all they're tracking. They're tracking
Yeah.
like, oh, this thing dropped 3%, this thing up 4%. Like you're just reading the symptom.
Right. For it to be a true AI system, it's got to be constantly learning and adapting based on the
Yeah.
conditions, not reacting to it, because at that point it's just reactionary anyway. And so it might be quicker than a
Yeah.
human, but it's still the same effect if it's reacting as opposed to predicting based on all the information. Or at
Yeah.
least that's the way I see it. I mean, correct me if I'm wrong.
That is true. That is very much true. And AI will look like things that humans can do too. I mean, humans were doing this before, like only like 10 years, 12 years ago. There were departments and buildings of people who were doing this. But AI can help in that, because AI can actually help in, or at least the way we do, the way
Yeah.
our approach is, the approach we use is that we use three analysis: the fundamental analysis, the sentiment analysis, and the technical analysis. So I'm not all against technical analysis. Like I love those indicators too, but it has to be in the context, under the shadow of the fundamental and sentiment analysis. And the way AI helps is that every currency has a different fundamentals, and
Yeah.
the sentiment analysis has to be scaled accordingly. And we will of course have more sessions to dive into each one of these analysis. An acronym we use so that you can remember it, is called FAST, FAST, FAST. And it's the fundamental analysis, sentiment analysis, and technical analysis. That's what we use to understand the currency that is about to become the strongest. That's the keyword. The currency that is about to become the weakest. Match those currencies together, create that imbalance so that wealth can be created.
Yeah, and you make a good point there, because a lot of times people don't necessarily take into consideration. Some people say, well, yeah, I like to trade or invest based on the technicals and others on the fundamentals. But when you're talking about currency, the fundamentals is basically what the news and certain conditions where that currency is located. So unless you're aware of everything that's happening in every country where where the currency is that you're trying to trade, it's almost next to impossible as a human to do it manually and really maximize it, because of the fact that you're dealing with multiple countries, multiple time zones, and obviously multiple news events and different things coming out at the same time. So now let me ask you, what's your approach then, as far as I know you touched on it, using the FAST acronym, but so from what I'm hearing is it's basically using a combination of it, but the fundamentals really being sort of like at the core of it, right? As opposed to the technicals and looking at the different technical analysis that a lot of people learn when when they go to some of these courses and try to learn how to trade Forex, that you're always seeing these type of different. It's primarily based on technical, but you're saying that the core, what you base it on is more on the fundamental side. Is that correct?
That is absolutely correct, because that's like me saying, like, have a diet that is only protein or have a diet that is only carb. No, in order for a good balanced diet, you need a protein, carbs, and your fats, right? So just like that, in order to be a good Forex investor, you do need all three. You need fundamental, sentiment, and technical. But you always pick your strong and your weak pairs with the fundamentals. That is exactly where always you start. Once you start, then you look at the other hedge funds and you look at the other big money movers and you see the sentiment. You see the money flow in billions and trillions. How's money flowing? And that is your sentiment. Once you've done that, then you go like, okay, fine. Now I need a really good entry to come in. For example, suppose I did this as Audi USD. I go like, okay, fine. Australian is doing really strong. USD is doing really weak. So now I will take a buy on the Audi USD. So now I'm going to go to my technical analysis. I've done my fundamental, I've done my sentiment. Now I'm going to go to my technical analysis to find that best entry point, which still kind of gets me in cheap and for the biggest move, or I can find that move. So that is where technical is very useful. And that is, by the way, when technical was designed, like some 200 years ago, like when technical was designed, that is how it was designed. It was designed that it was assumed that you have done your fundamental, you have done your sentiment. Okay, now let's find a good entry and exit for your pair or your any security that you're trading.
And now, how does the technology play into this? Just so that those watching can clarify or can understand clearly, because I see what the logic is. Now, where does the AI come into it? For example, is the AI making those decisions, like as making the analysis as well as making those entry and exit decisions?
No, AI is first of all. Before I even begin, I've actually worked in the banks, like and I actually seen the departments, and I have so much respect for those folks who did all of this work before machine learning, before Python, and before that. Because let me tell you the process. There are about like 10 major currencies. You need to monitor closely the historical trend of all those, each and every fundamental. For example, if you go on forex.com, right, GDP is a very good example of that. It's a fundamental analysis event, and you need to see the GDP of USA or Australian dollar for like last 10 years to see how the trend is going and how the trend is following along. So you need to do that for all 10 currencies. Each currency has about like 80 to 90 of fundamental metrics. For example, product price index, consumer price index, GDP, unemployment, interest rates are the big ones, and all of that needs to be monitored. Once that is monitored, then machine learning or data science, I would say, it makes it really easy for us to go ahead and extract that information from a verified source. A verified source would be US government itself, or Australian government, or like Mexican government itself, that's saying like, hey, these are my numbers, I am publishing them. So they can verify it, and it can go ahead and compare it with the historical context of the news, and then it can go ahead and then create a fundamental layout for you and can tell you like, okay, this is the weak and this is the strong currency. Machine learning can also do sentiment analysis for you. It can go and get the numbers from the Chicago Mercantile and all the other numbers, a quota, we call it quota, commitment of traders, that this is the amount of volume and money the big hedge funds or big banks are committing to a certain cause or
the
a
market
certain
makers, as that's called, right?
Yeah, the big bank movers, right? And that actually really I think that reduces your risk to like almost like only 2%. If your fundamentals, your sentiments are aligning well, that makes it very, very low risk trade actually. And then you can go to your technical.
Wow. So yeah,
I want to ask you a question. Machine learning can do like 90% of it. At the end of it, at least I feel so, there has to be a human hand and human mind that reviews all that information and goes like, okay, this looks good, this looks fine. Now let me press that trigger button and let's take the trade. I have not seen a system that is 100% fully AI or machine learning. There's still 10% of human involvement there.
Yeah, no, and I totally agree, which is why I asked that question, because a lot of times you see, normally you hear them referred to as the expert advisors, and which is basically these trading softwares that you see all over the place, these EAs, and most of them fail within a matter of days, some weeks, maybe you have the better ones lasting longer, maybe a month or two, but ultimately they all fail. And I think you hit the nail on the head, and I think that's the reason why. And so that's the key, is that human interaction, monitoring that comes with that expertise, such as yours.
Very important.
So yeah. So well. We've covered a lot. There's definitely been a ton of information, a ton of value that we've been able to share with our viewers, and we're very excited to continue the conversation. We're actually running out of time here for this episode, but you're going to be joining us for another episode in our series, yes?
Yes,
so
absolutely.
We're excited to talk to you some more and really share a lot of this knowledge. So if you're interested, stay tuned, because we'll have another episode coming up with Obaid and sharing some more gold, some more tidbits here. So we'll see you guys next time.
Thank you so much, George. Have a good one.
All right, thank you.
Bye.